Investors facing market volatility amid ongoing trade talks, but one New York firm says it can get you off that roller coaster. KKR executives say 90% of the firm's portfolio is shielded from Trump's tariffs. Joining me now is KKR balance sheet CIO Henry McVey. Henry, thanks for coming by the studio.
Thanks for having me. Always good to be here.
So let's start with the tariffs. Now, you say that you're fairly well insulated from them, but you don't discount the impact they're having on the economy. You made an analogy in a recent report to the tariffs being roughly the equivalent of oil jumping to $150 a barrel. Can you explain that dynamic and how you're shielding yourself?
Okay, so on Thursday, KKR reported its earnings. It's the firm's 49th year in existence.
Congratulations.
Exciting. And I think on the Scott Nuttall, our co-CEO, said that the firm had about 90% protection from direct tariffs. And what I would say is we've been a learning institution since COVID. We started to diversify supply chains. We started to think about this whole notion of security of everything. How do you build resiliency into the portfolio? I think that was related to our private equity portfolios, about 90%. Infrastructure is actually a little bit better, and then credit is more like our private equity. So that happened. That wasn't like a lucky day. We've been preparing for this for some time, and I think our base view going forward is tariffs that President Trump will keep about 10% tariffs on for some time, and then he'll use the reciprocal tariffs as kind of an on and off measure depending on how he negotiates.
Tell me more about that security of everything idea. Well, what does that look like in an investment portfolio?
I think after COVID, what we heard from our portfolio companies, we typically have 200 to 300 portfolio companies that we own around the world at a time. Number one thing that they came back to us and said is, we want resiliency. The security of everything means, do you have cybersecurity? Do you have transportation security, data security, water, food? And so we've thought about investing our firm's capital. We manage about $600 billion right now for different individual and institutional investors around the world. And what we thought about is, how do we use that as an investment theme to build resiliency, deploy capital across infrastructure, private equity, lots of things we do in technology. And so it's been a theme that frankly has gained momentum as geopolitical tensions have increased.
Speaking of which, you are also very diverse around the globe, of course. And right now, in particular, you've said that Japan and India seem like opportunities. Tim Cook apparently agrees with you. He just said, I think on Thursday, that the iPhones we'll be buying in the future will be mostly made in India, not China.
I think there are a couple things to keep in mind. One is Japan is the #1 owner of U.S. Treasuries. So to me, it's probably logical that the U.S. and Japan have some form of agreement on trade. We're also national security allies. That market, if you asked our founders, they would say that's where they would go if they were young analysts.
Wow.
Cheap valuations, lots of corporate carve-out activity. Financing is still pretty robust. And the firm we probably are the biggest player in Japan right now on corporate carve-outs and private equity. And actually, on our balance sheet, we bought a real estate manager, so we're starting to unlock value there as well. So that's an exciting market. Both institutional individuals and individual investors can play. We've been doing it through private equity, real estate, and infrastructure, but there are also ETFs that play that market as well.
Well, speaking of private, so that's a really interesting area. There's a lot of interest in private equity, private credit, et cetera. I've always been, frankly, a little wary for the retail investor because of those high fees. You're addressing that now with this deal with Capital Group, where you've just launched 2 new funds with I think the fees are what, 85 basis points, 80 basis points in that realm.
I think it's very reasonably offered. I think what we're trying to do is bring the best of private, the best of public, and create a vehicle that investors can enjoy to have that flexibility and also the excess return. So we plan to generate alpha on the liquid side through Capital Group, and then KKR through the illiquidity premium. And I think what we're trying to do is provide more individual investors who are focused on retirement security in a safe way, a vehicle that provides excess returns so that they can compound their capital on a long-term basis. Compounding capital, as Warren Buffett says, and he'll probably say it again this weekend, 8th wonder of the world.
We're just about out of time. You mentioned illiquidity, and the idea there is you can't sell everything right away. But because there will also be public investments in the fund, you could sell those in effect.
Yeah, it has the ability to move, investors can move in and out of that. And it's a new concept. I think we're pioneering this area with our colleagues at Capital Group, and we look forward to it.
Awesome. Henry, thanks so much for coming by.
Thank you for having me.